All right, 4:44 on this Wednesday afternoon. Cisco Systems reported quarterly earnings and sales that beat analyst estimates. The company's conference call is now underway. Let's head back to Laura Lee. She's been monitoring that call. Laura.
Well, Carol, this call is underway, as you mentioned, and John Chambers, CEO of Cisco, pretty much remaining upbeat on the call. Chambers saying that he's seeing, quote, a dramatic turn in fourth quarter orders, saying that the first quarter was the first quarter with positive sequential order growth, but he did say that it's still too early to tell if that marks a trend. Now, for the fourth quarter, earnings came in better than expected. Excluding some costs, earnings per share came in at 31 cents. Analysts were looking for 29 cents. Sales also came in better than expected, about $8.54 billion. Analysts were looking for about $8.51 billion. Now, this is critically important here because Cisco is a technology bellwether, and it gives a good sense of how the overall economy is faring. We're still waiting on the first quarter. Actually, the sales numbers the guidance is coming down right now, saying that sales, Cisco expects to be down about 15 to 17% year over year. So, Matt, I'm going to monitor this and send it back over to you.
All right, we're going to continue talking about this. Daniel Morgan is a portfolio manager at Synovus Securities, which has more than 979,000 shares of Cisco in his portfolio. He joins us now from Atlanta, Georgia, with his reaction. Dan, welcome to the show. Let me ask you first what you make of the beat. I mean, how is Cisco doing this?
Well, it's interesting because if you look at the revenues pretty much in line, obviously earnings above expectations, and I think it's, Matt, what we've kind of seen through the last couple of weeks with the technology stocks, and that is you're seeing cost cutting. We know that they cut out about $1.5 billion in costs. They did that in the quarter before. And you're seeing pretty benign revenue growth. I think revenues were down about 17%, and earnings were down about 22%. So I think what we're seeing is what we saw with a lot of these other companies, which is you're not really getting it on the top line. So how do you kind of squeeze it down the bottom? You buy shares back, you cut out the costs, and that's how you try to do it. So I think that's how they were able to get that extra 2 pennies above the estimate.
Does it concern you as a shareholder? I mean, if it's not coming, if the boost in profit is not coming from a gain in revenue and all they can do is cut costs, I mean, that only goes so far, right?
Well, yeah, and if you look back at Cisco's history, they were one of the companies that did well back in 01 and 02 because they had a large cash balance. Right now they've got about $35 billion in cash. At one point they used interest expense from their cash to actually create growth in their net profit. But it is disturbing, Matt, in the fact that you'd like to see them gaining momentum, but then you have to take a step back and realize what's going on in technology right now, what's going on in the world economies, and know that they are like everyone else. They're suffering from the same issues, and that is that demand has slacked off. But as your commentator was saying before we came on, it looks like John Chambers is saying that, this may be getting close to the bottom, that order growth is picking up going into their first quarter. He's going to be conservative, as he always is, and not say that things are, going off the charts, but this may be the low point, and that's what we can try to hang our hat on right now with Cisco.
Well, it looks like on the call right now they're saying they see first quarter sales down 15 to 17%, I should say. That's pretty much in line with what we saw, as you mentioned. In this quarter, what needs to happen for there to be a turnaround here? I mean, everybody's so positive on technology, and the shares have done so well, the companies have done so well in the market. What needs to happen for things to turn around for companies like Cisco and other tech stocks in the real economy?
Well, you're right, Matt. I mean, if you look at the aggregate growth rate in earnings for the quarter that we just reported, technology is down about 8 to 9%, whereas the aggregate S&P 500 is down 29%. And everyone's applauding that because it's better than expected. But I still think we have a ways to go before we start to see incremental increases compared to what they were doing at their peak, let's say, 2 years ago. We're going to start to see favorable comparisons going into the next couple of years just because they did so poorly in the past quarters. But we still have to get beyond that previous peak. And, obviously the economy has to pick up again. Whether you believe the stimulus package that Obama's got is going to do it or not, we'll have to see. But we still have a ways to go, I believe, in technology before we start to see growth back again above the peak levels that we saw, let's say, in 2007.
All right, Dan, thanks so much for joining us. Daniel Morgan there, portfolio manager at Synovus, and obviously a Cisco shareholder.